Welcome everyone, a new weekly market review from ATFX. My name is Gonzalo. I'm just here to give you a summary of the past week. I'm gonna share with you news. I'm gonna share with you also all events happens in the international and global economy, geopolitical views, also macroeconomic data, and mainly the markets, the quotes, the prices, the chart patterns, all movements we found interesting from the last week. If you are not, let me invite you to subscribe this channel and click on like if you appreciate the content, because it's the only way I can measure if this material is actually positive, it got a positive feedback for you. Let me just share the screen and let's start just making a short comment about what was the macroeconomic data from last week. From Germany, if you go to the calendar, you're going to find that since Tuesday, especially on Wednesday, we got a lot of macro data on European market. Germany, he got a factory order 6.4 versus the 1.2 expected. So super good number compared with expectations. And the PMI 54.1 versus 50.41 expected. So in the same line with expectations. But however, the European numbers, it was slightly worse. We got the PMI from Europe area. It was 52 versus 52.4 expected. So negative numbers for Europe. Also France, it was 48 in line with expectations, 48. But as you know, PMI below 50 indicates economic contraction. So it means like European economy is not actually growing. We saw certain numbers over the week. I published also on social networks that the industry from France is rising 2.9% since COVID. So it's actually getting reactivated, but it still is showing certain weaknesses comparing with other areas like China and like USA. Italy was 52.2 compared with the 53, and Spain was 53.4 compared with 55.5. So all of them either was unexpected or below 50. Because France was in line with expectations, but it was below 50, indicating contraction. Yes, that was not the top of the most important macroeconomic data from last week. As you know, the most important macroeconomic data was on Thursday, the report on the labor market in US, which it was positive. Since that report, actually, the market was reacting negatively, because the interpretation that the market is giving is like, if the labor market in US is still strong, is working well, there is no point for the Federal Reserve to stop the increase of the interest rates. And therefore, the other way around, if the labor market is reacting to these monetary policies and start to adjust the unemployment rate against inflation and increase the unemployment rates to the levels of 4% or above 4%, this is something we are expecting for a very long time, and it's not happening. It's still in 3.6%. Officially, the unemployment rate in US released on Friday, it was 3.6%. Good numbers, exactly in the line with expectations. Non-farm payroll was slightly worse than expected. It was 2009 new payrolls versus 240, 220. Let me check. Here we go. Where it is, 2009 new payrolls versus 225,000 expected. So again, bad numbers, but it still doesn't show clearly that the unemployment is rising, and actually showing that the US labor market is still strong, which is something that we heard from Federal Reserve repeating a few times. As much as they repeat this, that the labor market in US shows resistant, then the monetary policy is not going to change, and therefore we can expect that the markets is still going to show certain weaknesses or fears to keep rising above the maximum levels, because obviously if the monetary policy keep rising interest rates, liquidity is going to get dry. Actually, one of the charts I shared this week, last week, with the audience on social networks, it was actually the balance sheet of the Federal Reserve dropping versus the SP 500, Standard & Poor's, and NASDAQ 100 rising, which is a kind of divergence that we are not expecting to see in the market, because for the last few years, all have been going together. much balance on the Federal Reserve, more assets, more money out in the economy, market is rising. Less balance, therefore assets are sold and dollars are coming back to the balance, then market is dropping because the liquidity is dropping as well, and the dollar is getting more expensive. The only reaction we saw, and we will take a look to the charts later, it was a slightly decrease or drop on the price of the dollar in the dollar index. That was interesting. The dollar index was dropping after the release of the unemployment rate, but the rest of the markets, futures in general, was just keeping more or less lateral, rising a little bit, dropping. But again, we're gonna take a look later to those levels and those markets. Let me take a quick review about what was the main news I was sharing with over the week, and I was just reading over the week the articles and so on. We start with this one published on AIG. It was saying China strike back in the tech war, restricting exports of gallium and germanium. If you take a look to this article, you're going to find out that actually it's explaining to you that China is controlling 98% of the gallium and 67% of the germanium market globally. Then that means that there is no alternative providers in order to supply these minerals worldwide. The main problem with this is that this is the minerals needed to develop not just chips, computers, circuits, also military industry, radars, even some kind of health industry use this kind of minerals to develop the technology, high technology, let's say. So it's a kind of response given by China to the restrictions activated by Japan and US in terms of exclude China from exportations of high technology. So they basically exclude China selling these high technology devices, hardware, and so on, and therefore China responds just restricting the export to US and to Japan and the rest of the world of these minerals. And it's only two; they got more. Even the European Union is mentioned in the article. European Union just make a comment like president of the European Commission say they just hope the lithium is out of these restrictions, because if the lithium is also included in these restrictions, they're gonna get a serious problems. There is no alternative for exportations. They actually, one of the companies who was rising a lot in market, it was a Canadian mineral company who is actually exploiting this kind of minerals. But still, it's just project that it was rising almost 9% in market after China announced these restrictions. It's very interesting if you're looking for invest in certain stocks related with mineral industry. But a part of that is a long-term project. You cannot change the supply chain in a few months. It takes years to restore, if it's possible, the supply of China from other sources. Okay. What else? Saudi Arabia is keeping in the line with Russia also. Argel, Libya are also agree and summarizing to this let's say this new team who is trying to restrict or cut the production of oil just to equilibrate or rebalance the prices on the market. Actually, the oil was responding to these actions because the oil is rising from the end of the previous week. It was around $71 Brent, and it's almost 78 this by the end of the week. So it was making a long term. I can take a look also to the charts of oils later, so you will see how was exactly the movement of the price, and it was exactly in the line of what it was expected. Actually, now it's getting close to certain selling areas, right, on the chart. What else? Let me see. Almost all Fed officials agreed to skip Young Hike Minutes Show. This is an article that Reuters published on the beginning of last week. And it was very interesting. I share on my social networks the article because it was just mentioned that based on these comments, we know at least that not everyone in the Federal Reserve is agree with the idea of skip the interest hikes. They are not totally agree. I believe one of those ones who are not agree with this idea is Jerome Powell, because he's the face of the Federal Reserve and he's the one who's going to be judged if the inflation is not solved completely. There is one report, very interesting one report from BlackRock, who was sharing the inflation. Let me find for you the chart. It was sharing the inflation, showing to you that the composition of the inflation is okay. Yeah, it's dropping. The composition, the energy factor on that one is dropping, but the rest of the factors like food prices and non-energy prices are still rising. Let me find the report so we can share that chart because it's very interesting. Because it's giving to you in only one single picture the idea of what really is going on when we talk about underlying inflation, persistency, right, or stick inflation, and some of them are calling also. Let me see if it's this one. Let's open it. Seems to be a little bit slow now. This is one. New regime, new opportunities. Yeah. Here it is. So this is the chart I want to share with you guys. If you take a look here, you can see that the factor, energy factor, is gone on the inflation rate. You see it's saying percent of points falling, but not fast enough. Contribution to euro area annual inflation. So it's showing to us that actually all drop in inflation is caused by a drop in the energy prices. Gas, if you take a look to the gas prices, it dropped massively compared with the previous year. But still, what we can see here is the food, non-energy industrial goods, services still are over appreciated compared with the previous year also, you see? In the line of 2018, 2019, 2020, 2021, even deflation in some cases. But now clearly deflation when it was the lockdowns and the COVID era, right? The economy was closed. But we can see now that actually it's many other factors related with inflation that didn't disappear from the equation yet. So we need to keep an eye on this. What else? Yeah, we were talking about Federal Reserve. Now let's go to companies race to secure supplies after China restrict gallium and germanium exports. This article is just mentioned the ones, details I was giving to you, like Canadian company who was rising almost 9% in market after this announced. In the same line with many other minery companies that work in exploitation of, it was 5N plus. It was the Canadian-based company that produced specialty semiconductors and performance materials, rise almost 9%. With neo-performance materials and recycler of gallium and manufacturing gallium trichloride rise 5.73%. What else? Binance office in Australia. Binance office in Australia were under basically Binance office in Australia searched by financial markets regulator and is saying, and I think this is another chapter on the war against Binance. It's just mentioned here that the authorities in Australia, financial regulators, were just going to the offices and make a registry on the offices and so on. Nothing in particular in this article, by the only single fact is the second news we read in West countries that against Binance. I believe probably what we can see here is also a kind of efforts to control Binance, so to expose Binance or even take Binance out of the West countries market, led by US, obviously, because we read the previous week about what was going on between the SEC and Binance, and Coinbase also is related with this, but Coinbase after all is a US company, but Binance is a Chinese company, Chinese capital company. So I guess it's a fear on the authorities that Binance start to get engaged with the investors community in US, in another West countries, and start to offer them what is almost already done, almost banking services, credit card, wallets, access to multiple accounts, access to multiple currencies accounts, and so on. All of these services is actually a threat for banking system in those countries where banking industry is super well developed. So obviously the banking industry got a certain influence in those countries, and these countries are the countries who are actually stopping the steps of Binance to block them from growth. Even the CEO of Binance in US mentioned months ago, and we quote that, I share on my social networks also, the comment he did about that America is not anymore a place to develop businesses, unfortunately. What else? German exportations disappoint again. It's just mentioned the drop. It was growing, the exportation of Germany was growing, but it was growing less than the previous periods. and still nothing comparing with the exportations of China and even the United States is growing the exportations, but nothing else. So it's a minor drop in May. Exports is another illusion that cyclical exports are not an exception, but really the new normal. Basically, behind of this is also the idea that maybe Germany can actually recover from a recession, can escape from that recession. It's 2 consecutive quarters in negative growth, which is officially a recession. The expectation was maybe close a third quarter in 2023, growing back to the track, right, and start to work back again on recover the economy. But it's really unlikely that happens. So we're gonna keep an eye also in the numbers for Germany. But still, that's the situation. This other one is a little bit scared because it says China's defense chief wants to expand cooperation with Russia. It's a little bit scary because we can see how these things of Ukraine conflict is getting the world polarized, and we start to see how China and Russia are making also military maneuvers and exercise together. They do an exercise. They did already aerospace exercise in the aerospace of China and the Meridional Sea of China, and now they're planning also to make a naval war exercise together, China and Russia. While we also see that NATO is mobilizing troops inside of Europe, getting close to the borders of Russia, like the one we mentioned last week. It was Germany displacing or moving 4,000 troops to Lithuania, to the borders of Russia there, which means like tension is increasing between the world, between nations of the world, and every single step we do in this direction is getting closer and closer to a third world war, which is something that obviously financial markets doesn't like it, because absolutely every single thing that is it means global instability. It means also risk, and therefore markets are dropping, and heaven safe assets are just rising. So we can take a look on oil, we can take a look on gold, we even can take a look on Bitcoin. I said this week a very interesting chart showing all the equity markets dropping. It was yesterday, no, it was the Thursday morning. It was all markets dropping, and Bitcoin was actually rising 2.8%. After that, it was just getting some sells also, and back to normal levels. But for a while, for like a couple of hours, we were watching how the European market was dropping, and Bitcoin was still resisting and rising almost 3% with the rest of the markets dropping. It was so beautiful picture. I shared that picture also in my social networks, just proving that maybe this time is different. Maybe Bitcoin is actually working as it was expected, as the legend mentioned, right? An asset gonna save you from risk. An asset gonna be totally free, not controlled by central bankers, and absolutely antidote or medicine against inflation, right? That was what it was reflecting the other morning, Bitcoin movements, right? Now let's take a look to the charts, so we will get a clear picture of what happens on Friday. We got the non-farm payrolls. This is the reaction of the SP 500. You see? Nothing really important. I mean, it's just losing 50 moving average. It's getting close to this support line that is almost around 4,420. Probably, if the movement continues, we're going to see 4,300 and so on. Even the gap, this gap over here, is giving to us a target of 4,300 points in the Standard & Poor's. We're going to keep eyes on that too, because I believe that that's one of the most likely scenarios we're going to see the next week, okay, over this week. Now, in relation with what else? NASDAQ. NASDAQ, it was one of the markets that it was dropping, even more than the rest of the market, even more than Standard & Poor's, even more than Dow Jones. For some reason, it was dropping even more, when we know that NASDAQ has been showing to be more strength than the rest of the markets, tech market, I mean. We can see actually that it's in an uptrend since the whole year, and it's the only one who actually is showing a clean uptrend movement. I mean, like, it's giving to you the chance to keep rising, probably to the levels of 15,500, almost that area. Remember, please, this is not advice of any kind. I'm just sharing with you ideas, but my intention is not tell to anyone here what to do with the money. It's not even related. It's just my personal opinion, not even related with ATFX view on the market. And again, this is something I'm just sharing for your entertainment. So I believe this is the areas that we're probably gonna see on NASDAQ if the markets are going well. If the markets are not going well and they are dropping, I would suggest just take a look on SP 500 in short, like we say right now. Yeah, to the levels we mentioned, those ones. Yeah, and also it's loading the level. So if we go to Europe, we go to the biggest index in Europe, which is German DAX. We see that the pattern is collapsing, like I mentioned the previous week, also in the previous report. The pattern is collapsing. All this year, the market has been doing really well, even when the main expectations from a fundamental perspective, it was not good. The market did really well. But as you can see, every single new uptrend move is weaker and shorter. Therefore, I believe that it's so obvious that the market is losing the strength and its strength is gone and the price is dropping. So that means that the correction of the full movement, if we take a look to the whole picture, few steps back and take a look to the whole picture, we will see that retracement of the prices can take us to 14,500 points, even 50% of the movement, around 13,800 points, all these areas, right? Still, we got 200 moving average there as a support. But once you lost this, it's really difficult to keep it. If you see all this pink area, red pink area I draw here, it was drawn over the week before these levels happens. I mean, you can just check my social networks, which means like we actually giving good levels. We actually giving good projections here because the price is moving between those parameters that we drove in advance. So I think it's a good guidance. So if you like it, please keep following this channel. And also, like I say, give me a like, click on subscribe. So I will see that you appreciate this material, and I'm going to keep doing even more often because I'm just doing the weekly one, but we can do it even a short one daily or every 2 weeks if it's needed, you know, because I'm here to help and I also constantly follow the market. What else? We just mentioned the biggest index in Europe, so I think that's all. Let's take a look also to, dollar index, super important. Look, this is something. This is definitely something. We didn't see a reaction in the market, but this changed the scenario because this the Friday morning was still here, the market, and we were expecting like maybe dollar we're gonna keep. The dollar will rise or keep rising in this uptrend, right? But what we see right now is that unemployment rate, that non-farm payroll actually pull back down the dollar index. With this move, I can tell you, I didn't even check, but euro dollar probably is gonna be rising. You see, we got exactly the same movement in euro dollar. They're up, and this is very interesting. Look, I also share on my social networks this one. It's just the movement of this little flag here that we give, and I say, depending on the numbers, if the numbers are going in a certain direction, is exactly matching the resistance line draw in long terms for euro dollar around 1.10. And right now we are in 1.0950 in the line with that trajectory that we dropped there, and we put as a target after detect that movements, right? So yeah, it broke up the pattern and it's just moving the price according with what is expected, which is at some point target the 110 on euro dollar, right? Gold should rise also. You see it's rising. Dollar is dropping, gold is rising, and at this point, look what we got here. At this point, we can identify here a very nice pattern, which is 1, 2, 3, 4, 5, 6, 7, shoulder, head, shoulder. Okay. Now, the target of this pattern is almost this. Yeah, it has to be activated. But if it's getting activated, it's giving to you targets in this region. Let me draw better with this one. Yeah, a gold rising to about $1,590 per ounce, right? That will recover the levels of that we previously seen. But definitely it's changing. It looks like the chart is showing to you that something is changing in this pattern, right? And the weakness of the dollar is also showing to you that we are reading implicitly between lines that Federal Reserve is not going to keep moving forward with the interest rate with these two moves, gold and dollar. Market still is not reacting the way that is expected with that scenario, but still we can see that it's very interesting. Let's take a look to the oil and then to Bitcoin, and we are done. Oil, yeah, the movement I was mentioned to in oil is this one. As you can see, here we go. This amazing movement, and it's in the line with the previous week. So we have done in the last 2 weeks all this movement. From 72, 71 something, right? To almost 78. We are in 77.48 in Brent oil. So amazing, the movement done in oil too, okay? I don't know what I did. Oh yeah, I just switched to gold. What else? Bitcoin. This is the last one. Bitcoin, super interesting market this week too. Let me down. We got also the certain levels, right? So as you can see, it's between 29,500 to 31,500. That's the levels of the Bitcoin, right? And between that levels is moving. For a while on Thursday was just rising about $30,400 per Bitcoin. It was amazing because it was doing that while the rest of the market was dropping. All the futures were in negative and in red, and Bitcoin was just moving forward and forward and forward uptrend. Super spectacular. Now it was dropping again, but it's still resisting about 30,000, right? That 29,800, that's the levels. So we got really clear on the screen the levels that we need to keep eyes on. If it's breaking up, just get ready to buy more if it's just doing any kind of pullback, giving to you nice entries. If it's broken down, just again, well, in this case, we are not trading against Bitcoin. It's a buy and hold asset. So if you see that it's dropping, you choose good levels, next lower levels, just to increase your position, increase my position. I'm not telling you what to do. Remember that, please. I'm speaking too much, but I'm not telling you what to do with your money. And that's all. That's my view. That's my personal view on the market. Do whatever you want with this. Leave me your comments because I'm gonna read it. And yeah, let me know if you want any particular market you would like to see. We can even do these sessions in the streaming, so you can actually ask me through the chat if you want to take a look in certain other assets, and we can just follow up the market based on your request. Happy to help, and remember, if you really like this this content, this material, and the energy you spend on this, just pay me back with a nice like. And I hope to see you next week. Take care, guys. Be careful with the market, and bye-bye.